Welcome back to First Issues as we continue reviewing the First National Bank of Botswana full-year financial results, now with Chief Financial Officer Dr. Mbako Mbo. Dr. Mbako Mbo, thank you so much for coming on First Issues and affording us your time. Please speak to our viewers about the results. Give us an overview.
I think we've had what we see as a good year under the current economic climate. We have had a good set of results that are driven by growth that we see as broad-based. So our lending business, I think, saw some decent growth, 8% on our advances, and then we also saw some decent 7% growth coming through our non-interest revenue. So driving our lending products, really, it's all products that we have under that spectrum. We've got our personal loans doing very well, our home loans, which is a key area that we focus on. So we also have seen decent corporate deals that also obviously supplemented the growth, and we've also touched quite a number of key sectors of the economy as we grew our advances book. Obviously that culminated into the 15% overall income growth that you see us posting. That also obviously came with lots of discipline around cost. We kept our cost growth within threshold, but at any given point in time, our cost will always grow slower than our income. So that's the combination of what really brings this result.
Let us now zero in on profitability. Earlier at your presentation, you gave some key elements that you believe led or drove profitability for the bank. So perhaps at this point you could reiterate those.
All right, yes. Obviously, profitability is a function of two things, really. It's a function of income, it's a function of cost. So just maybe zooming into our income story, just on the interest income side, two main variables influenced the growth that we are reporting there. You may also probably have realized that in the past year the policy rate environment was quite heated up, if I may use that term. Obviously, we then transmit the policy intentions to the customers, and so that's why you then see our interest income also coming up. But also part of that is the reason that part of that is really the fact that our advances book, the underlying assets, they also grew substantially. So those two combine to give you the substantial increase in our interest income. That is to do with our lending book, and then on our non-interest revenue, it's mostly a volumes game. Obviously, we've got a very ambitious journey towards financial inclusion. So we have seen volumes across a wide range of products and services that we give to the communities. If, for instance, I spoke about the e-wallet offering, which is quite a popular product. We recorded 12.5 million transactions for the year, which is a substantial increase from what we reported last year. We facilitated 24 million sales in terms of airtime. We facilitated millions of electricity purchases. So all those volumes, and obviously the client base also, we recorded a decent increase in our client base. So all those things add up to sort of lead to the 7% income growth that we reported on our non-interest revenue side of the business.
Well, lastly now, financially, what is the future of the bank looking like?
Yeah, I think we are optimistic of a good year ahead. Obviously, we operate within the confines of the economy itself. We will take a strain wherever the economy takes a strain. But obviously, the result that we publish at the end of the day is a function of how we interact with our customers, and how we sort of roll out our products and services to customers. So I would still say we do expect some growth into the next year. We do expect some growth in our lending book. we do expect some volumes coming in our non-lending business, in our Transact business. We do expect to see some of the growth that we saw in the year that ended to continue into the coming year. So one aspect that I just want to point out quite clearly is that we do expect our impairments to continue on a normalization path. Normalization path meaning that the credit loss ratios that we have reported in the last 2 years are on the low range of what we see as a normal range, basically reflecting us unwinding some of the risk positions we have held since COVID times, and we are almost getting to the tail end of releasing some of those provisions that we have held. And then we will obviously, with growth coming in as well, we will see the credit loss ratios ticking up. But we still see we do expect a decent run in the new year. Yeah.
This program was brought to you in association with First National Bank of Botswana.